Okay, recording this video after close of trade Friday, the 31st of January 2020. It's just gone 8 p.m. Chicago time. Well, that was quite a day. Do hope you traded it well. We had almost 65 points of range today, top to bottom, which is just an unbelievable number. And I do hope you're expecting some weakness. I pointed to this chart a few days ago, which was the chart of the NASDAQ leading up into this high. We had all of these blue professional bars. That's better pro-am, showing the average trade size is high, and those are professionals getting out on those highs. And we have exhaustion buys, so we just run out of buyers. And so last couple of days we had some strength just back into closing the gap, and then today the big down move. Kind of just confirming that those professionals are exiting up there at those highs. And not unsurprisingly, it came with some good news out of, I think, Apple and Amazon. I don't follow any single stocks, but there was kind of good news with them, and that was almost a question of kind of buy the rumor, sell the news. And when those results kind of came out, they're almost kind of too good to be true, and time for professionals to take some profits. But anyway, so hopefully the weakness that we had today was not unsurprising to you. So every day, at the end of the day, I go through a whole bunch of my charts just to see what's going on, and I like looking at the global macro charts to see where the money is flowing, where the money is flowing in terms of currencies and different asset classes. And today, something surprised me. On a big sell-off day today, the Euro chart went up. So I think I need to rethink one of the fundamental drivers that I've got in my head that I've got wrong about how the Euro, why the Euro is moving in a particular direction. And I'm kind of changing my tune from more bullish temporarily in the Euro than bearish. I thought it was going to maybe go to parity in the next swing down, but I don't think so. And this is why. So this is a mess on a small screen, but on a big screen, it looks perfectly good. And it shows me my major currency pairs. So we've got the dollar index here, Japanese yen, Bitcoin, then the Europeans, so we've got the Euro, British pound, and the Swiss franc, and then the emerging markets and more of the kind of growth opportunities with the Aussie dollar, Canadian dollar, Mexican peso, commodity currencies, and kind of emerging market type currencies. And so here's today's chart in the Euro. The Euro went up on a big down day. Normally, in the last kind of 10 years, we've been talking about risk on and risk off. And typically, risk off is like a sell-off day like today. In risk off moves, we would have the US dollar go up and currencies like certainly the Aussie dollar, Canadian dollar, Euro go down. And yes, the Aussie dollar did go down today. The Canadian dollar's also been going down today. But the Euro went up. And so I think what is happening is almost a carry trade. So carry trade is where investors borrow money in low interest rate countries and invest those funds overseas. And the traditional carry trade over the last 30 years has been in the Japanese yen. And so when we have a sell-off in the equities market in the US, the Japanese yen strengthens, as it has been doing over the last 2 weeks, because people are forced to sell assets and repatriate funds. They've got kind of margin calls going on, and they're repatriating funds back into Japanese yen. So the carry currency kind of strengthens. But traditionally, the euro has not been a carry currency, not kind of in those 20, 30 years. It's been more of a developed market, kind of somewhat growth opportunity, not an emerging market type of growth opportunity, but a growth opportunity outside of the US. But something's different is happening, and I think I should have recognized that in the last couple of cycles, is that because the interest rates are so low, and in some cases negative in Eurozone, people are borrowing funds and moving them offshore to invest in growth opportunities. And so today's move resulted in a down move in the dollar index. So that's money flowing out of the US. And we're now underneath the lip here on the dollar index chart. We bounced off a couple of Rambo patterns, and we've got temporarily a little bit of strength, but we've got a cyclical turn in the intermediate time frame that's kind of flipping in here at 98, and so that could easily just push us down into the next area of support. So that for me was a surprise today. I have to rethink where I think the dollar index is going. Euro, same thing. So it flipped today. We've had all this weakness, but cyclical support on the intermediate time frame came in. So we could easily see a little bit of strength while we've got this kind of rush out of kind of equities for the time being. And where has the money been flowing? So the money's been flowing from the Eurozone to junk bonds in the US. And this is HYG, which is an ETF based on high yield growth is what it stands for. So it's junk bonds. So this is the Eurozone customers trying to chase yield using the low interest rates in the Eurozone, either borrowing money or just sending funds out of the Eurozone into high yield opportunities in the US, and that's been going well for them while the euro has been going down and the high yield assets have been going up. They've been paying a yield and they've been appreciating in value. So here, again, last couple of days, we had exhaustion buy, and this is starting to roll over and a little bit of weakness. We just need to crack below this support on 83, and that'll trip us into a downtrending move here. And you can see, the strength of the selling over the last few days kind of going on here. So the money was flowing out of high yield junk bonds, and interestingly being repatriated back into the Eurozone, and you can see it in the government bonds chart of the Eurozone. So this is again another ETF you can use to follow the flow, and this is IGOV, IGOV. And over the last few days, I was looking at this pattern. We had a whole bunch of blue professional buys at the lows, and I was thinking that's interesting. That's kind of buying this 49.70 kind of support at this point. And you can see we've had strength this whole time, and we came into cyclical support on the highest time frame. That pullback in an uptrend support kind of came in, and we've been strong, and we've now broken above resistance on 2 time frames here. So IGOV is an ETF that follows government bonds outside of the US, and they're predominantly in Europe and some extent in Japan. 77% of the bonds here are European government bonds, 23% are Japanese government bonds. So you can see the money flowing out of the US sector back into safe assets in the Eurozone and in the Japanese zone here. So it's an interesting one to kind of follow. So they have been piling out of the Eurozone into the junk bonds, and that flow is starting to reverse. It's flowing back into the Eurozone, back into the Japanese bonds, back into the European bonds, and that's why IGOV is going up. Interestingly enough, you can also look at junk bonds internationally. So this is HYXU, and this is non-US junk bonds. And the junk bonds in the US were selling off today. The junk bonds in these overseas markets were actually going up. So again, they're kind of chasing yield, but it's back into their kind of more domestic markets, so back into the Eurozone and back into the Japanese assets. So, so that's the story on the euro currency, which went up today to my kind of surprise, and that, I think, is the reasoning behind it. Not that I should particularly care about fundamental reasonings for why things go up and down. I think sometimes it's a lot purer just to look at charts and just to look at breaks and so on. But I don't know, there's a bit of me that always wants to understand what exactly is going on. Hat tip to Martin Armstrong. He's a genius when he's kind of talking about these things. Sometimes talks in a little bit of riddles and is not totally clear in the way he explains things, but he's been a big help in like finding the clues to see what's been going on here. And it's funds flowing out of the Eurozone into high yield, and now we're starting to see that flow kind of back out. Anyway, so there we go. A little video on the Eurozone and why the euro went up today. Might do something on the weekend. We've got Brexit today, tonight. Finally kind of secured for the UK, and might have a look at the British pound chart versus the euro and just see what's going on there. Anyway, enjoy your weekend.